Is Canada's new government reshaping our housing policy? Could we be heading towards a recession? And what does the recent federal election mean for New Brunswick's real estate market? If you're new here, my name is Cameron Brioux and I'm a realtor in Moncton, New Brunswick. I create videos every week to help you buy, sell, and invest in the Canadian real estate market. But if you want to dive deeper into the greater Moncton market, you can go to the first link down in the description and you can book a call with me, either online or we could grab a coffee. Today, I'm breaking down the latest economic insights compiled by our friends over at Edge Analytics. And by the end, we should know what this means for our local real estate market. We've all felt that uncertainty in the air, new minority government, tariff threats, interest rate questions. It feels like we're at a turning point. But here's what's fascinating. The data suggests we're potentially entering a new phase in the housing cycle that could create both challenges and opportunities for New Brunswick homeowners, investors, and first-time home buyers. Stick around because the next few minutes could influence your real estate move. Let's start with the biggest political shift of the year, the federal election. With our new minority government, there are some significant policy implications for the housing market. First, we're likely to see higher deficits than the $62 billion initially projected, with the NDP and the Bloc as key partners. Both parties favor increased spending, which means more short-term economic stimulus. This economic approach also means slightly lower odds of aggressive interest rate cuts compared to what might have happened under the Conservative government. The good news, the housing focus remains firmly intact with some potentially game-changing programs. The $25 billion prefab housing financing, the $10 billion affordable housing fund, and a hands-off approach to the CMHC rules. The most interesting development could be the possible return of the MBREB, the multiple unit residential building tax deduction, which could massively increase rental supply. What does this all mean for New Brunswick? Specifically, our province stands to benefit significantly from these prefab and affordable housing initiatives. Builders in towns like Miramichi and Edmonton could receive funding that offsets our high construction costs. If the MBREB program passes, it could spark a new wave of rental construction, attracting capital from higher income investors, possibly even retirees or professionals in New Brunswick looking for tax efficient investments. Our local governments should be positioning themselves now to take advantage of these programs with shovel-ready projects that can capture the federal funding. Now, let's address what's been worrying markets alongside the election: tariffs and recession fears. Remember those worst case scenarios from last year predicting a 25% base tariff that would trigger a 4% drop in GDP, similar to the 2008 financial crisis? Well, we've dodged that bullet. What actually happened was a 10% global base tariff that hasn't yet been applied to Canada, with 25% tariff specifically on steel and aluminum. The latest forecasts suggest that we're looking at about a 1.5% GDP decline. That's manageable, but not the catastrophe many were predicting. How does this affect the New Brunswick housing market specifically? Well, we're not a manufacturing powerhouse like Ontario or Quebec. Our exports, especially those connected to aluminum manufacturing and forestry, could feel indirect pressure if the U.S. economy slows down. This matters for shipping and trucking and production across our province, but the key takeaway, this is a speed bump, not a roadblock for our economy. Now, for the big question on everybody's mind, where are interest rates headed? Here's something fascinating. In the Bank of Canada's latest monetary policy report, they've used the word uncertainty 49 times, more than during COVID. That tells you everything about where we stand. Consumer and business confidence is dropping, and U.S. recession odds are climbing past 60%. As the saying goes, when the U.S. sneezes, Canada catches a cold. But here's where things get interesting for home buyers and owners. Mortgage originations are actually surging right now as people are trying to get ahead of 2026 renewals. Many homeowners that are hitting what's being called the payment shock when they renew at higher rates. But, and this is crucial, rates are projected to move down to the low 3% range by the end of the year. So what does this mean for New Brunswick? If you're facing a mortgage renewal in 25 or 26, you might see some welcome relief compared to what people experienced this time last year. And if you're a first-time buyer who's been priced out of the 5 or 6% rates that we saw recently, your monthly payments can become much more manageable and your buying power could increase. The most important thing to remember is that these lower rates could spark increased buying activity while our listings do remain low, potentially reigniting upward price pressure across Moncton, Fredericton, and St. John. Let's talk about the most fundamental aspect of real estate: supply and demand. The biggest mistake people make in real estate is forgetting that cyclical things are cyclical. Markets go up, markets go down, but the underlying pattern remains the same. Looking at housing supply across Canada, it remains tight despite some increases in Ontario and BC. But here's what's crucial for us outside of the provinces, including Atlantic Canada. Active listings are still 30 to 50% below peak levels, and residential new construction is falling, which points to even tighter supply by 2026. On the sales side nationally, we're already at recessionary levels. In Ontario, sales have dropped to 1990s levels, worse than during the financial crisis. The good news is we likely hit the bottom in Q1, and what's holding buyers back isn't affordability anymore, it's confidence. Here's what that means for New Brunswick. While other markets are suffering, we're still operating in what's fundamentally a seller's market. Inventory remains relatively low, and buyers in popular areas are still facing bidding wars. If sales rise as confidence returns, which is likely as rates drop, and single-family construction stays slow, we could face another round of price acceleration by 2026. This is critical information if you're thinking about upsizing or downsizing in our region. These opportunities might not last long. Now, let's look at an interesting contrast. While the resale market is stabilizing, the rental market is actually expected to soften. Why? There are three factors. First, population growth has stalled, especially among temporary residents. Second, there's a massive output of rental supply under construction nationally. And third, CMHC's lending initiatives were so successful that we may have reached mission accomplished in terms of stimulating the rental construction. What does that mean for New Brunswick? Developers in Moncton, St. John, and Fredericton might want to pause or reassess multifamily rental bids unless the new NBREB tax incentive comes through from the federal government. For renters, this could finally bring some relief. Vacancy rates have started ticking up slightly. Combined with our 3% rent caps and new supply, this may help cool those aggressive rent increases we were seeing over the last few years. The key data to watch is 2026. That's when rental vacancies may normalize and the market could finally stabilize for tenants after years of difficult conditions. With our new minority federal government, there are some important policy shifts that could affect our housing market, and we're likely to see higher deficits than the $62 billion originally projected, as the Bloc and NDP both favor increased spending. This means more short-term economic growth, but slightly lower odds of rate cuts compared to what we might have seen under a different government. The housing focus remains intact with some potentially game-changing programs. As we mentioned, the NBREB program, $25 billion in prefab housing financing, a $10 billion affordable housing fund. And in New Brunswick, we could benefit specifically from the prefab and affordable housing initiatives. I know that in smaller towns like Miramichi and Edmundston, where they could receive this funding, it could dramatically help them offset the cost to make affordable rental units. We're evolutionarily wired to focus on bad news, but let's talk about some positive scenarios that could emerge. What if sales simply return to normal levels? Not just a surge, just normal. With our tight inventory that would shrink available homes to about 4 months of supply, under that scenario, we could see annual price gains of around 7%, not the crazy 20 to 30% we saw during COVID, but solid, sustainable growth. For New Brunswick, which already has tight inventory, this could mean fast price growth again, particularly in areas with strong markets like in Dieppe or St. John and Fredericton. For renters and first-time homebuyers watching this video, consider this a gentle warning. The window to buy affordably may be narrowing faster than many realize. On a national level, the markets set to lead in the coming year include Saskatchewan, Manitoba, and Quebec, all characterized by tight inventory and very low construction levels. While New Brunswick isn't getting some of the same national spotlight, our combination of low inventory and rising immigration gives us similarly strong fundamentals. Investors who've been priced out of Ontario and BC are increasingly looking east again. New Brunswick is still affordable, but for how long? Let me leave you with 5 key takeaways. Recession risk is real, but it won't be a 2008-style collapse. Interest rates are coming down, so prepare to act when the time is right. Sales likely bottomed in Q1. What's missing now is confidence. Rental markets will soften even as home prices find a floor. Policy changes around prefab housing, affordable initiatives, and possibly the NBREB tax incentives will shape 2026. If you're living in New Brunswick, whether you're thinking of buying, selling, or building, or just trying to afford rent, this is a moment to watch closely. Policy shifts, pricing trends, and population changes are creating a dynamic environment, and if you play it smart, you can stay ahead of these trends. If you found this video and analysis helpful, hit that like button and subscribe for more of these breakdowns and national trends. Thanks for watching, and I will see you in the next video.